All right, welcome everybody. So Tesla just had breaking news. They dropped their production and delivery numbers for Q3, and it was a breakout quarter, one of the highest quarters Tesla's ever had. They had deliveries of 497,000 vehicles, which is 12% higher than the Wall Street consensus, and they had energy that was 10% higher than Wall Street consensus. This is what they showed here. The 497 in deliveries, 447 in production. You can see the breakdown here between the Model 3 and Model Y. We'll break this down in short order, but this is what they dropped here. Also, they're going to have their earnings call on Wednesday, October 22nd, and this is pretty big. The growth in deliveries is 29% quarter over quarter and 7% year over year. So you see even better than last quarter or last Q3. This is now the Tesla fleet has 8.5 million cars, best quarter ever. And you can see here, this is where we're at today on the third quarter of 2025. And then I'm just going to show a few more things here. This 497 is the highest Tesla deliveries ever. Or wait, is this correct? Oh, these are comparing Q3s against each other. Of all Q3s, it's higher. And then they beat their previous delivery record of Q4 by 25,000 units.
It's
So even that quarter is a highest quarter. Jeff, tell us how you reacted to all this.
Yeah, I mean, so first off, the news narratives are interesting, but just in terms of facts, this is the highest quarter ever. This is much higher than expectations. We saw expectations growing throughout the quarter. I think they started in the 420 to 430K area, and then they've been slowly elevating the past several weeks to above 430, 440. Some were up at 445, 450, and they're just allowed to change their numbers, every couple of days in terms of expectations. But Tesla blew through all of those. So for everybody that's saying, "Oh, this is a pull forward tax credit," first off, there's three major regions that Tesla ships to. The U.S. is one of them. China and Europe. We'll see what those numbers look like. We saw a very strong September for both of them. But the key thing here is, for all the talk about the tax credit expiring, first off, orders were still coming in a day or two ago that are going to receive the tax credit, and they'll be delivered throughout Q4. But for all this conversation and everybody saying 450,000 units, for Tesla to be roughly 10% higher than that, and B, this 29% quarter over quarter. If you've ever run a manufacturing operation, if you've ever had to produce anything in mass production, to take any operation of this size and increase it by nearly 30% quarter on quarter is it's almost unheard of. And just hats off to the Tesla team. And finally, energy deployment's also at a record. This is going to blow through. I think they're already at over 31 gigawatt hours this year. They're going to blow through last year's number when Q4 is announced. So that business is off to the races and growing as well. And the final thing, in terms of analyzing the production versus deliveries, that 50K-ish gap where production was below deliveries is beautiful. This is 50,000 units flushed out of inventory when the rest of the industry is, concerned about stagnation of inventory and just overall much higher inventory. Tesla is probably going to be at a 2 or 3 year low in inventory, and that 50,000 units coming out, that's cash. That's, depending how they're configured, $1.7 to $2 billion of free cash.
Okay, so they were able to do this, isn't it, Jeff? Deliver more than production because
Correct.
of the people are ordering it, putting a down payment, and then they won't get it till Q4?
No,
right?
no, not at all. Those are cars that were delivered in the quarter. The reason that deliveries are higher than production is because of inventory that was already on the books, and they're
Gotcha.
flushing through that channel inventory. Yeah.
Okay, thank you. I misheard you. Okay, that's cash coming in, so that's a big deal. Deliveries are high, 497. So big number, Jeff, 497. I mean, it would have been great if it was 500, just the round number. But this is 12% higher than the consensus. And this is, the cashy betting sites actually called it closer because they were at the 500,000 mark, 502,000 mark, which is funny. The betting sites seem to have hit it closer than all these supposed experts. What's going to happen to the stock, do you think, and what's going to happen for this particular next few weeks here?
Yeah, I mean, with any of these events, there's usually a couple of day rule. It's Tesla's a very unique stock the way it trades. So we'll see. It was up, it was down, it's flat. We'll
Yeah,
see. We'll see where it falls. But in general, those elements are very important. Low inventory, higher cash. Those are important. Now, if you watch the news coverage, they're just talking about the tax credits going away, and they're talking about the um, the regulatory credits are also, at least for the U.S., are going. By the way, terrible coverage on this as well. I was watching CNBC. They're acting like the number is going to zero. The number is not going to zero on regulatory credits. There's other countries that are participating in that, and but in general, the things you want to look at is low inventory, higher cash than expected, greater sales than expected. Should be very healthy revenue, both on again vehicles and cars, vehicles and
and
energy,
energy. Let's
and
talk
and
energy. Yeah.
this should be very good for gross margins, cash. So this should be a very healthy quarter for Tesla, and we're just really firming up the balance sheet even better than it was before.
The core business. And of course, we know that they're going to talk about Q4 is going to be a disaster. And so they're going to try to change the narrative. But energy was great as well. So Tesla deployed 12.5 gigawatt hours of energy storage in this quarter, their best quarter ever. This is a great table that Sawyer put together here. You can see that Q3 was the highest. This is deployments. And so, it shows up later than when you actually see sales. And we knew that this was going to come either Q3, Q4. So I don't know if Q4 will be about the same or even higher, but at least we knew that this was going to be coming up higher than anyone before. This shows you the growth is happening.
Yeah,
Q3 here, and that's 30% higher quarter over quarter. Thank you, Roland. 81% year over year. You can see here Tesla surpassed last year's deployment, entire year deployment in just the 3 quarters. So this growth in energy, that looks like to me like an exponential curve. And of course it should be because Tesla's opening up, Lathrop, and then they doubled it with Shanghai, and then they're about to double it with a new, or not double it, but a third extra with the new gigafactory in Houston.
it's an end of
So
next year.
yeah,
Yeah,
yeah. Thoughts on
yeah,
energy?
yeah. This is choppy, but it's going to chop higher. That's what's happening with energy. So what if next quarter's 11? I mean, it doesn't matter. It's chopping higher, and that's what's going to happen with energy deployment. There's so many things involved with permitting, with financing from customers, with site readiness. There's a lot of things that have to be coordinated, but there's no excuses here. You don't have to talk about it. It's just chopping higher, up and to the right. So that's going to continue. Houston, I think, is going to ramp up probably at the end of, really start ramping up at the end of next year, and they're going to start producing mega block and a different type of, they're going to start going to longer duration energy, which is where a lot of demand is. That's where EOS is right now. And they're going to be producing, they're going to start ramping that component of it as well. So there's going to be, I mean, if you're looking at stationary battery storage, I would say if you're following these companies, you're following Tesla, you're following EOS, you're following Fluence, this is going to be a very hot space. And we'll see where it goes. But all of these data centers, all the energy needs, even the data centers that are taking up all the energy, all the other existing energy needs are going to need battery storage, and it's really proving to be a valuable asset, and a valuable asset to be localized in the U.S. And we just saw that the U.S. government's taking a 5% stake in Lithium Americas as
Yep.
well. So, there's a relationship there forming with GM. Tesla gets a lot of lithium out of Piedmont. They actually leverage a lot out of the Carolinas and Quebec. The Quebec stuff is coming in under USMCA. It's not tariffed. So Tesla's in a very good position for energy. The big thing for them on cells are LFP, and getting LFP ramped up, lithium iron phosphate cells, getting that ramped up in the US so it doesn't have to undergo all these tariffs, which, by the way, out of China, which are going to be increasing in the new year as well. There's a scheduled increase on battery cells and anything with the lithium ion coming into the U.S., especially from China.
Energy storage, of course, is a great story. It's just the beginning. It's going to exponentially grow. And you just explained everything that's happening right now. It's all good news for both Tesla and EOS and other energy storage business. So let's go back to production delivery just for the folks who've just dialed in. Tesla dropped their the numbers, and it was very, very good news. It's a breakout quarter. It's they delivered 497,000 cars. 497,000 vehicles. That is 50,000 more than their production because they had previous inventory. That means the cash flow is going to look very strong for third quarter. That's what I want to ask you next, Jeff. They announced that the earnings call is going to be on Wednesday, October 22nd. That's going to be the day after I come back from vacation. And so I'm going to be like doing a 6-hour, we'll do a live stream here on this channel with our panel of experts. Come in there at 12:30 Pacific time. But they're going to do this, and they'll drop the financials at 1 p.m. Pacific time, and then they will do the actual webcast at 2:30 Pacific time, 4:30 Central. We'll watch that. So, Jeff, when this comes, now that you know what the production delivery numbers are, now that you know what energy looks like, what's your thoughts about what's going to happen on this earnings call? It sounds like it's going to be really good.
It will be, and I'm sure they schedule it around your vacation, Herbert. So
the financials.
Yeah.
Sure.
If you go back to the slide showing the production deliveries, I want to call out one thing I think that's happening. First off, this gap is quite large between production and deliveries. Again, deliveries are higher than what they produce in the quarter. This gap flushes inventory, huge free cash flow gain. But here's another thing I think that's happening is number one is all this concern about, oh my God, the tax credit's going away. Well, Tesla's going to be positioned well from an inventory perspective. If demand continues, they can continue to supply and put product in an inventory, but they're not sitting on a bunch of working capital that they're going to have to start doing price protection on and start having to do. So their risk of that is very low. But I think here's the key thing. This drawdown, I was expecting maybe 20,000 higher, maybe 25 or 30,000 higher. They are clearing out inventory for another reason. I believe it's a different vehicle coming out. Yeah. Again, I have no inside information, but what the worst thing you would want a higher price Model Y in the channel when a lower cost, maybe different size, whatever, a lower cost version is coming out. The worst thing you would want is your channel flush with all that inventory of the other version. So to me, not only is this a big tell on cash and setting them up for great earnings, to me this is a gigantic tell that they're going to put a new product into inventory, and that product was probably going to be a lower price vehicle.
And that's a huge statement by you. We know that the more affordable vehicle is supposed to come, but that's a great comment you made. Jeff, you know how, excuse me, because of the $7,500 credit expiring, and it did at the end of midnight, December 30th, but there's all these people that ordered it, but they take advantage of the credit, but they won't be delivered the car until fourth quarter. Yeah. Do you think that Q4 deliveries will be high at that point?
Yeah, I mean, there's going to be some effect of you saw what happened in inventory, so it's not like you can go and readily find a vehicle. That's global inventory.
Everything was empty. Yeah, all the photos of many places, showrooms were showing that they were completely empty.
Yeah. So it's going to take them a while to get those late September orders delivered. So you'll have a very strong October, probably going into the early part of November. But I believe during that period, they're going to be ramping up potentially, again, we don't know, but another vehicle. To me, from an operations supply chain perspective, all the signs are there. You've cleared the channel of inventory. You've ramped up deliveries well ahead of production. Uh, you have changeovers happening at these factories. You have people, being told that, hey, there's a couple a day changeover occurring here or there. To me, all the signs are setting. This is how you properly introduce a new vehicle that's adjacent to an existing channel you have. This is how you properly introduce it: is you clear the channel so you don't have that risk. Remember, Tesla's bringing in about, I don't know, $10 billion of inventory a week building Model Y. So it's
Mm,
enterprise
that's a
risk
lot of
level
money.
management of
Hmm.
of a supply chain. So they've got to do this right. And so far,
Mm,
this is a very healthy way to leave the quarter with inventory, very healthy for cash. But more importantly, there's not going to be this other product in channel of like, oh, should I buy that or should I buy the new thing? You're going to be able to get the new thing, and you're not going to have this other stuff sitting in inventory causing indecision and potentially Osborning it for people. So really
I see.
good, really good
Yeah.
operational work by the Tesla team.
I see what you're saying. You would try to order a regular Model Y, and they'll say, "Oh, it won't be available for 3 months or something like that." And then, but the cheaper one, you might be able to get in a month or so. I thought it would be the other way around. You know.
Yeah, there
So
could
we'll
be
see.
you could start seeing delays in the existing Model Y, where this is hypothetical,
Yeah,
as they focus on if they're building a new vehicle. So yeah, all those things could factor together. I hope it's not 3 months,
we'll
but
see. Yeah.
yeah, it's gonna take a while to get a new vehicle out to all the different
Mhm.
channels.
So, well, since I have you here, Jeff, you are kind of somebody following BYD. BYD and Rivian dropped their numbers as well, and there's a sharp, contrast between them. So it'd be nice for you to explain what's actually happening. AJ did a fantastic job. If you want to follow BYD, AJ is the one to do. He really does deep dive research on this at ALOJOH. He just reported that BYD reported the first year. This is the first time they had year-over-year vehicle sales decrease in 5 years. Monthly sales are -6% year over year. Quarterly sales are -1.8% year over year, and the trailing 12 months is -0.48% month over month. So these are all over 5 year lows, excluding seasonal and one-off factors. They reported September sales of 396,000 units. I think that's just for the month. Decrease from 419 units in September of last year. The lunar year. And then, yeah, he's just explaining it all. So here's his numbers. I'm not going to go through it. It's very detailed. But you can pause the screen here if you want once it's finished recording. And then you can take a look at this closely. This is the trailing 3 months. This is the trailing 12 months. So this is a slight dip. I don't know if we can read too much into this, Jeff. What do you think? Do you think we can read a little bit more into this?
Yeah, AJ does a good job. You When you look at these companies, this is what we were looking at BYD a year ago, and you have to look at all the metrics. What you can't do a drive-by media thing, which is what's revenue, what's deliveries, what's EPS, and just stop there. Because if you stop there with BYD, you would have been shoveling money into that company, knowing that the underlying metrics were showing some signs of illness. So I mean, let's see what they're still producing a lot of cars. They're still producing a lot of EVs. And the reason is their average selling price. This is, again, not widely discussed. They keep getting compared to Tesla, whose average selling price is over $42,000 a vehicle. Their average selling price for an EV, I think, is in the $16,000 to $19,000
Yeah, two different
range.
companies.
So
Hmm.
they're competing, and they'll tell you, each company will tell you they're competing in different segments, but the media just loves to conflate it, count the number of cars. So when you have that amount of working capital, that amount of inventory, that amount of supplier liability that they have, when they had to condense that accordion in the last couple of months and start bringing down those days payable, this really puts stress on their cash. And then something has to break. They can't produce as many vehicles. If the channel is flush with inventory, they can't put as many vehicles in the inventory. If you don't have enough cash because you're reducing those payment days, you can't build as many vehicles. So, and who knows? So, is this a supply driven reduction because of their financials, or is this truly demand driven? You know,
Mm,
we
yeah.
have to study the other players in China and how they're doing overall. And then you have to look at their global expansion and see how that's really going, because all people are doing right now with their global expansion is they sold 14 cars in Germany last year this time, and now they sold 10 times that. And so they're just doing these weird compare comps off of very low numbers, and they're not really looking at how healthy is this expansion in Europe, how profitable are
Yeah.
they, what's happening in Latin America. So I would follow AJ's commentary on that for analyzing the company,
And
what you
yours.
see
And
from.
yours.
Yeah,
Yeah.
yeah.
Yeah, so not just volume of cars sold. Dig into the financials, and that's the thing about Tesla, right? We are expecting really good financials. They've always had pretty always positive financials generally in terms of like cash flow, those kind of metrics. So we'll see what happens on October 22nd. Rivian also presented their numbers, and so they produced 10,700 vehicles in Q3. They delivered 13,200 vehicles. So they delivered 13,000 vehicles, but their 2025 delivery guidance, it's probably going to be lower, right?
It's a
Than
lower
what
window,
what
yeah.
they a lower window
Their
than what they had
prior
initially been
window was
saying.
up over, I think, 46,000. So again, you
Yeah.
have to like dig into the headlines to find something like, can you even when they narrow their guidance, and it's still kind of a very positive headline. It's fine. I think we want Rivian, we want EVs to do well, but they have to get from where they are today to their new lower cost mid tier. They have to get to their version of Model Y, which is probably not going to be in volume until the second half, maybe the later second half of next year. And you have to project forward. So that's a year from now. Where's Tesla going to be a year from now? Everybody wants to compare what Rivian's about to do to what Tesla shipped 5 years ago with the Model Y. The Model Y next year and the Model 3, I mean, arguably they're going to be unsupervised, full self-driving, and they're going to probably be a couple $1,000s cheaper for Tesla to build. Tesla's not stopping with COGS reductions. Those will continue. They don't stop. There's no point of like, well, we've been building this thing for a long time. There's probably no more money to make. When you have
No,
that
but
many thousands of
yeah.
components and that many thousands of operations in the factory, you will find opportunities to get efficient or go in and change the design and build something fundamentally different under the hood. So Teslas will get cheaper. Teslas will drive themselves and create that revenue. And of course, their robotaxi business will be expanding in both breadth of cities and number of vehicles and number of rides at a much lower cost price point than what we're seeing from others. So you have to project forward on these companies a year from now and understand what they're doing. And you can't, I think it's very easy for the media to fall in just comparing car hardware and shipments when Tesla's really changing this business to a software and service model.
And I just want to repeat something you've been teaching us for the last year, right? So BYD has over 40 different trims, and all these cars are very different from each other. And then so they can't take advantage of the scale of supply reduction of costs. Tesla has 5 trims, and then they just introduced the Model Y L, and then soon the Model Y. I think it's going to be called the Model Y S, some sort of like a standard car, this more affordable vehicle. But they're built on the Y production line. And so you've been saying that imagine when you take the highest volume sales of this Model Y today, the number one car globally of all cars, then you add Model Y L, and then a smaller vehicle that are all using much of the same parts. Cost is going to go down for all, including our
That's right.
main Model Y. So
You're a good student,
that's
Herbert.
I'm just repeating what I heard from you so that the audience can rehear it, because they
Yeah.
haven't followed us necessarily all this time. But this is what happened today. Deliveries is 497, fantastic number. It's great. It's above consensus, and so this sets us up for a great quarter. Conversation at the earnings should be more about robotaxi, not about oh, your car business is struggling. At least we can stop talking about it so much.
I think by the time we get to earnings, hopefully Tesla will have released a lower cost vehicle to start taking that $7,500 gap in the US and quite frankly abroad. It's going to help. This is what people don't get. It's not that the $7,500 thing is a US thing. If Tesla's answer to that is a new vehicle, that new vehicle is going to go everywhere. And that new vehicle is going to lower price everywhere. And we see what happens with demand elasticity. It goes vertical between $30,000 and $40,000. Like every $1,000 you reduce the selling price of the vehicle, demand goes vertical. It's significantly higher. So they're at a really critical point here, and obviously dropping it below 30,000 with the Cybercab and other upcoming vehicles is going to be a really big push. But if they can get a couple thousand $7,500 gap, remember part of that $7,500 gap, Tesla was paying down in high interest rate when they were covering the interest rates to get them down from 6-7% to 0 to 3% on these interest rate offers. That's many thousands of dollars of gross margin per vehicle that Tesla was covering, and Tesla was taking an upfront hit on. That's gone away. Interest rates are coming down. So they've already had a reduction last month. We're probably going to get another one here, one or two more this year.
Next month.
So you have that happening, and you have the lower cost vehicle coming in. So you're going to take this $7,500 gap, and Tesla's going to eat. They're not going to have to buy down rates as much. They're going to take the price of the vehicle down, and you're going to have interest rate reductions helping. So I think they're going to meaningfully eat into this gap, and it's not going to be this cliff that the analysts are predicting in terms of vehicle. It's not going to be the case, and all you have to do is do some math on what's happening macro-wise and what's happening with Tesla's actions with their vehicle lineup, and that will tell you that Tesla's on a growth trajectory back again.
Okay, good. Thank you so much, Jeff. Appreciate you jumping on here to help us report on the production and delivery numbers of Tesla. There's really no one else in the community. You're one of the best. I know you'll say there's others. I got it, yeah. But you are one of the best, and I appreciate you sharing that knowledge. We are on our way to a good Q3, but also we're looking forward now to other breaking news, of course, which is FSD version 14 should hopefully drop, if not this week, next week. And then we're also waiting for, at some point, the more affordable vehicle this quarter. And you think it's going to happen before October 22nd. Thank you so much, Jeff. Appreciate everybody. Bye.
Thank you.